and this is a Joby Aviation, ticker symbol JOBY. And again, I thought, again, how do I start with this price action? Well, or how do I start with this price chart? Well, this advance, again from the April low, this is pretty decisive. Lots of little price gaps. We see prices move very, very far in a very short period of time. So this is clearly an impulsive structure. Everything that we have seen or witnessed since that, say, early August peak, it's pretty much ugly price action all day long. Ugly, ugly, ugly. Sloppy, choppy, numerous overlapping waves. But the key thing, though, on this decline is that as of yet, it is still contained within parallel lines. So that continues to argue that this is ultimately going to be proving to be a counter trend move in a still larger uptrending market. Then we apply, well, many of you already recognize these lines here. This is my KTL, the Kennedy Trendline timeline technique. And again, there's nothing magic here. I kind of always have to laugh at myself a little bit because if you know anybody who is a professional analyst, we have all of us have a bad habit of wanting to name things after ourselves. But it's just a simple trick. I learned this about a decade or so ago after doing some pretty intensive analysis of Apple. And what I noticed was that many, actually quite several of the counter trend moves, big picture, like on a weekly or monthly price chart in Apple going back several years, if not several decades, they seem to last proportionally about the same period of time. So what I began to do is, in practice, is simply take a line from the extreme here to the termination point of the downward move. This is what I call a basic or initial KTL or Kennedy timeline. And then I come over here and just move that to the top. Okay, so that basically tells me I don't want to try and identify the end of this counter trend move any time to the left of that line. So that line would come into play, say, October 30th. So in other words, I don't want to see this, I don't want to identify the pattern complete until after that date. Okay, that's when it's most likely going to actually come into play. And then many times I'll take a secondary KTL line, again from the origin point to the point of recognition. What is the point of recognition? The point of recognition is that point on the price chart or that price on the chart where after we see that move, there's no looking back. Okay, so that allows me to draw a secondary KTL line. Now, what this technique does is it basically identifies or kind of zeroes in on a window of opportunity, a window on where a low is most likely going to occur. Again, I don't use the word always because when it comes to financial markets, rarely do I ever use the word always because I never have seen or witnessed anything that always works. But there are tools and techniques that certainly have a high degree of reliability, and this is one. And then we begin to apply a little bit of what we talked about yesterday. Remember the double failure swing low, one of my favorite patterns? Well, it appears that we're doing something similar right now in Joby. We have that initial advance, subsequent decline, another advance, and another decline. Now, as of yet, this double failure swing low is unconfirmed. I want to get above 1658. If we can get above 1658, I think that will, number one, produce or complete the double failure swing low pattern. And then if we can get a little bit more rally here above the upper boundary line of the base channel, that should clear the way for this pop higher I'm looking for up to about 24. Okay, now let's move on to another price chart. Again, blank price chart, pause the video, take a shot at labeling it yourself. Okay, well, welcome back. Okay, now when I first saw this price chart, really what my eyes just fell on was that this move up here, this was a three-wave move. Going back to April, up, down, and up. Okay, and we also took out the prior swing high right here. Okay, so again, I mean, without getting complicated at all we do is we go back and take a look at, okay, what Elliott wave pattern do we work with that allows for a three-wave move to a new extreme? Okay, and I'm talking from a corrective perspective. Well, it could be an expanded or a regular flat. That would be a wave B, three-wave move to a new extreme. Or if you're working a running triangle, sometimes wave B, well, not sometimes, but to be a running triangle, wave B must terminate beyond the origin point of wave A. That could be a running triangle. So you have two choices. Basically, the expanded flat or a running triangle. I like the expanded flat scenario, so that's exactly how I'm going to label this. Here from the high back in January of 2025, A triangle BC down for wave A, and then ABC for up for B. And then notice on the 5-wave decline, something very, very important and I think very, very telling. Wave C terminated at 6.55. Wave A actually terminated at 5.48. So in other words, this is what we refer to as a truncation or a failed wave, or more specifically, a running flat. Now, whenever this incident occurs on a price chart, it's basically telling you that there's a lot of hidden or underlying buying pressure. That's what occurs whenever you see a wave C of a running flat take shape. And then also too, just like in Joby, notice the advance up from the November low. We rally, pull back, we rally again to a new high, pull back. Now, I'd like to see a little bit more, say, strength in this market to kind of really lock things in. But again, this does appear, again, that's the operative word in that statement, appear that we are working a double failure swing low. I would like to see the market get into the 9 handle, but better yet, to ultimately confirm the presence of third wave price action, we need something decisive again above the upper boundary line of the base channel, again confirming the presence of third wave price action. Same thing in Joby. We need to get above that blue line, the upper boundary line of the base channel, to confirm the presence of third wave price action. Because we're not there yet, we don't have confirmation. That's why I talk about confirming price action so frequently in much of my work. And then if we pull back from the daily to the weekly time frame here, apply that KTL, you can see that, hey, this little window right here is a nice area to begin to look for the culmination of any type of counter trend or stale price action. Well, that's about it for me for today. As always, thank you very, very much. Have a wonderful weekend, and I will see you next week.